Good morning. Can y'all hear me? Can you hear me?
Yeah.
Okay, perfect. Thank you. Do y'all want to hear me? So today we're going to finish. I'll give a couple more minutes for students to come in. And I would love to see y'all faces. Today's the last day of class, and then I will have office hours that I'll set up on. Y'all's exam is on Tuesday. So I will set up office hours on Monday, and we'll talk about what time is the best time for y'all to, have office hours on that Monday. So today we'll finish chapter 11, and then any questions that you have on the other chapters that are on the final exam, we can address. We'll also address any questions that you have on the exam, on Monday when we've got office hours. But any that you have today, of course, we can address also after we finish chapter 11. Good morning, everyone. Good morning. Good morning. Address, Robert, wait, let's see if I can find it. My son that lives in Chicago, so we'll do this. It's 10:01, so just pretend it's 9:59. Oh, let's see if I can find it. Probably won't now. So my son lives in Chicago. That's where Edris lives, and he just bought a house in Chicago, and he was in his neighborhood and knew that he just bought the house in Logan Square. Yeah. And he took this picture and sent it to me that there's a house, and look at what the house in Logan Square had.
That's funny. I've never seen that.
Isn't that cool?
That's not too far from me either. That is pretty cool.
Yep, a University of Tampa flag. Can everybody see that? A University of Tampa flag outside a house in Logan Square. Of course he sent a picture to to me about it. I mean, what are the odds of that?
There's a lot of UT students from Chicago.
Yeah, but then they're flying a flag
right there. Yeah.
Right. It just put a smile on my face. Anyway, so that was pretty cool. All right, so in chapter 11, what I'm going to do is I've got the topical coverage for the exam, and I'm looking at chapter 11 to make sure that we've covered what's in chapter 11, and of course what we haven't covered we'll finish today. Cost allocation. Of course, you need to know depreciation for straight line and the units of activity, the units of production or the activity based. We're not doing DDB, and for the Connect where you've got DDB, I'll go back and give you the points on that as I think I sent out an announcement about that. Remember, I'm gonna call out some terminologies that you already know that we've gone over, but remember the definition of the depreciable base, or the allocation base, that is the maximum amount that will be depreciated, which is cost minus the residual value. Because you're going to see this in your chapter 11 Connect, that we cannot depreciate where the book value is lower than the residual value. So you cannot depreciate more than the allocation base. So for example, if I have a truck and I estimated that the truck was going to have 100,000 miles. So we calculated what the cost per mile would be under the units of activity method, and say that in the last year that the truck had, where the cumulative amount that the truck had driven was 110 miles instead of the 100 miles. Well, then in the last year of depreciation, you won't be able to take the amount of miles that they drove multiplied by the cost of miles per unit for the depreciation for that year, because then your book value will be below your residual value. So the amount of depreciation that you take in the last year will be limited, because you don't want, again, you don't want your book value to be lower than your residual value. Another way of stating this is that your accumulated depreciation cannot exceed your depreciable base, okay, the allocation base. So that's one thing that you learned. You see that you have to apply that in your Chapter 11 Connect, of which I switched and made it due, tomorrow at 8 o'clock. You also learned what book value was. You also learned about partial year depreciation. When are the two times that we have partial year depreciation for an asset?
The first year and the last year.
Good, the first year and the last year, the year of acquisition and the year of disposition, okay, that you'll have partial year depreciation. So be careful when you're looking, that you're looking at the dates that it was acquired and that it was sold, so that you properly calculate in the first and the last year, as Edra said. The journal entries for when I sell an asset, when I exchange an asset, and then when we retire an asset. Remember the 4 steps. When you dispose of an asset, if you go through the 4 steps, I gave you the 4 steps in the notes page that I gave you for disposal of an asset, but also reminded you about the 4 steps in the topical coverage sheet, okay? So if you go through those 4 steps, calculate depreciation up to the date of disposal, calculate book value, calculate your gain or loss, then do the journal entry. How do we calculate the gain or loss when we exchange an asset? We compare book value to what?
Fair value.
The fair value of the asset we're giving up. Good, Matt. Okay, the fair value of the asset that we're giving up. Compare that to your book value, that's your gain or loss. How do I calculate the gain or loss when I sell it?
Is that the same way?
Well,
Yeah, you subtract the 2, right?
pardon me, right. So I compare the book value to what to calculate a gain or loss?
Fair.
Right. Well, but what are we getting?
Selling
The amount
price.
sold.
Very good. The selling price. The selling price. Okay. Selling price. When we sell it, we're getting, a price which should be the fair value, but selling price minus book value. And then when we retire an asset, we will never have a gain. And the loss on retirement is equal to the book value of the asset. Okay. Now we're going to get into the new parts of Chapter 11, looking at my topical coverage that we have. Before we get into the new parts, there's just some things that, like I said, that you read that are easy to read and comprehend, that I don't focus on in class. But we know that when we depreciate property, plant, and equipment, that we debit depreciation expense and we credit this contra asset account called accumulated depreciation. When we amortize an intangible asset, or we deplete a natural resource, we debit either amortization expense or depletion expense, but what do we credit?
Accumulated depreciation.
If I'm amortizing, do I have accumulated depreciation?
Oh, accumulated.
Yeah. When we amortize an intangible,
You credit the asset itself?
perfect. You credit the asset itself. There is no related contra asset account. Okay. So when you amortize an intangible and when you deplete a natural resource, you credit the asset itself. It's that there is no contra asset account called accumulated depreciation. Okay. The reason is because usually you have many more property, plant, and equipment. You know, individual, if you were to think about the Excel spreadsheet, say that my property, plant, and equipment account has $5 million in it. And that $5 million, I'm going to have an Excel sheet that says I have a desk and I have a computer and I have, you know, whatever, this piece of equipment, this desk, this, you've got it. That the Excel sheet would be very long with each individual asset that I have. So that when I go to sell it, I can calculate the book value for each one very easily because I've got the cost of it and I have the related accumulated depreciation for each individual asset. Well, with respect to natural resources and intangible assets, we usually don't have that many, or if I have a franchise fee and I've got a patent, then they would be in two separate accounts and you just credit the account itself. So that's the reason that we've got that contra asset account with respect to PP&E, is because the quantity, the number of those assets that we have are so many that it would be difficult if we were crediting PP&E itself to keep up with the book value of each individual asset. Okay, so the thing is that on amortization and on depletion, you just credit the asset itself. On page 585, it talks about group and composite depreciation methods. We will not cover that. We will not cover group and composite depreciation methods. Right now, I want everybody to go to page 587 and 588. 587 and 588. This is for the revaluation of property, plant, and equipment. Are we allowed to value property, plant, and equipment at fair value under US GAAP? Under US GAAP, are we allowed to value property, plant, and equipment at fair value on our balance sheet? Come on, this ought to be a quick answer.
Yes.
All right. And under IFRS?
No.
All right. Edris, it's the opposite.
I had a 50% chance, so there you go.
You had a 50-50, right? But it's the opposite. Under US GAAP, we report on the balance sheet all of our long-term assets at book value, which is cost minus accumulated depreciation, or just the book value that it is at, if it is an intangible asset or a natural resource. Now, under IFRS, companies can value their property, plant, and equipment at fair value. And page 587 and 588, it went through an example of how how you calculate and the journal entries for revaluating your property, plant, and equipment under IFRS, where you can revalue it to fair value. Now, I said that we need to understand the concepts, that we're not going to be doing the calculations on it. So I wanted to use page 587 and 588, where they went through an example of the calculations to point out the conceptual parts of revaluation under IFRS that I want you to know. When you look at the problem on page 587, for December 31st, 2021, the fair value of the assets was $84,000 and the book value was $80,000. So there was a $4,000 increase. The fair value was higher than the book value by $4,000. So under IFRS, the companies can write up their property, plant, and equipment. At the top of page 588, I want you looking at the journal entry. Now again, I'm not going to ask that you do the journal entries or do the calculations, but I want you understanding the concepts. So we've got an increase in the value of $4,000. So we can write up our property, plant, and equipment by $4,000. For the $4,000 gain that they had, the increase, what account did they put the $4,000 into?
Valuation surplus.
Very good, revaluation surplus. Now you see revaluation surplus was credited for the $4,000, but what is, you see revaluation surplus dash what? OCI.
Other comprehensive income.
Good. Other comprehensive income. So, does a revaluation surplus affect net income?
Yes.
No, because it's part of other OCI.
Right, it affects OCI, other comprehensive income. Let's go back to chapter, well, we discussed it in chapter 1, we focused on it in chapter 4. So let me remind you about chapter 4. So I'm gonna write on the book write on the board. And I forgot that I was gonna write on the board today, and I'm in shorts. I hope that my shorts don't show, but if they do, I'm sorry. Okay, so that's one of the things about teaching online. You know, you see the people on television and they got, you know, a suit on up here and, you know, no telling what down at the bottom. So, we've got, can everybody see the board okay? Fix my screen. All right, so remember, we have net income, which is on our income statement, you know, revenues and gains minus expenses and losses. And then we had either plus or minus, depending upon whether you're plus or minus OCI, you know, and it's plus or minus because it could either be a gain or a loss, the OCI. And the combination of net income plus OCI, does anybody remember what that summed up to? We learned it in chapter 4.
That comprehensive income.
Nice job, it is. It is comprehensive income. Comprehensive income. Now, net income is closed into retained earnings. Remember, revenues and expenses and gains and losses are closed into retained earnings. Does anybody remember what OCI is closed into? Which stockholders' equity account is OCI closed into? Y'all were supposed to forget this stuff. This was chapter 4. Do y'all remember AOCI?
Oh, yeah.
What is, oh yeah, now the memory's coming back. What is AOCI?
Isn't it additional other comprehensive income? I might be
Good.
wrong.
That is accumulated other comprehensive income. Accumulated other comprehensive income. And it is a stockholder's equity account that's reported in stockholder's equity. So here we see that a revaluation surplus goes into OCI. So it does not affect net income. It is not in net income. Now, why is that important? Well, many of the profitability metrics that companies use is based on net income. You think about earnings per share. Earnings per share is a very commonly used metric for one of the metrics for profitability. And it's based on net income as my numerator, not total comprehensive income, right? When we look at what our profitability measure is at the net income level, that percentage is based on net income. Really, OCI is just kind of in this, just a neverland. I mean, it's there and it's reported and an informed reader knows what it is, but like our PE ratio, our price to earnings ratio, you know, is market share, is the market price divided by EPS, which doesn't include OCI. So when a company, of course, an IFRS has a revaluation surplus, it affects OCI. It's important that revaluation surplus dash OCI. It does not affect net income. Okay. So December 31st, look at the problem on page 588. So they had a $4,000 surplus in 2021 that went into this revaluation surplus account that is reported in OCI, does not affect net income. Now in December 31st, 22, they had a $6,000 decrease. In other words, the fair value was $6,000 lower than the book value. So in 2022, they had to write down their property, plant, and equipment by $6,000. Look at the journal entry. They debited revaluation surplus for $4,000. And then for the additional $2,000, they debited revaluation expense. So, number one, when a company has to write down their property, plant, and equipment, they're going to debit revaluation surplus up to the amount that they have. They had $4,000 in revaluation surplus from the year before. So they can only debit revaluation surplus for $4,000 to get it to zero. Your revaluation surplus cannot be a negative number. So the additional $2,000 went into revaluation expense. Where do you think revaluation expense is reported? Does it affect net income? Does the revaluation expense affect net income?
Does that also go into OCI?
No.
Oh, it does affect net income.
No.
Oh, why?
So does it affect net income?
No.
Well, then if it doesn't affect OCI, what else is it got to affect?
Yeah, it affects net income.
It affects net,
Oh, okay, it does. Okay.
right? So a surplus does not affect net income, but a revaluation expense where you had to write it down does affect net income to the extent that there was no surplus, to counter the decrease. Does everybody understand how, if I have a write down, I first debit revaluation surplus up to the amount that I have any. Then once I get revaluation surplus to zero, then the rest of it goes to a debit to your revaluation expense. Revaluation surplus does not affect net income. It goes into OCI. A revaluation expense affects net income. It's reported in your operating expenses. Okay? So that is the concepts that I want you understanding with revaluation, about how the increase, if you're writing your property, plant, and equipment up, affects the income statement or the statement of comprehensive income, and how when you write it down, how if you don't have any surplus from prior years to counter the write down against, then you've got revaluation expense, which does affect net income. In chapter 1, we talked about or one of the secondary characteristics of accounting information is conservatism. We've talked about conservatism, and we have seen where we apply a conservatism quite a bit. This is another example of where conservatism is impacted, that the surplus does not affect net income, but a write down does affect net income.
And under GAAP, how does it work under GAAP again?
It doesn't, because under GAAP, we're not allowed to reevaluate our property, plant, and equipment.
If you had a loss, you wouldn't even consider a loss under GAAP though? Like
Well,
if
you
you're
consider a loss when you actually sell it.
Right.
When you have a realized loss.
Okay.
But this right here, that 4,000 in the first year,
yeah,
and then the 6,000 in the second year, the 4,000 in the first year is referred to as an unrealized loss. We'll also call it an unrealized gain, the 4,000, an unrealized gain. It's also called a paper gain because on paper it increased, and we call it unrealized because we haven't actually sold it. It won't be it can't be a realized gain or loss until we actually dispose of it. Okay? Under US GAAP, we report long-term assets at book value. We cannot revaluate our property, plant, and equipment under US GAAP. It is just not allowed.
and is that in a sense just more conservative compared to IFRS?
It goes deeper than that.
Yes.
I don't know if this is one of the things, remember there's been the big convergence project where we're trying to get one set of standards. That will never happen. We will never have one set of standards, but we're trying to make them as alike as we can be. This today remains one of those big differences. And whether the US will allow revaluation or not, I don't know. I used to think no, that we would not. The reason is, and I'll quickly get into the concept as to why the US does not. The US doesn't think that it is, remember the two characteristics that we have of accounting information, relevant and faithful representation. Remember those two? Well, under US GAAP, valuing your property, plant, and equipment is not relevant information because companies don't have this equipment for sale. And so because it is not for sale, US GAAP doesn't think of it as a relevant number. IFRS, on the other hand, can say, well, we think it's a relevant number because if this company were to go bankrupt, or you're trying to decide what the fair value of this company is, knowing what the fair value of the property, plant, and equipment is relevant. So you can see the tug between the difference between the two, the way that the two, the FASB and the IASB view that. What is relevant? Is it relevant that it's at fair value on the balance sheet, although the company does not plan on selling these assets because they're using them to produce revenue? I don't know. What's more relevant? Okay. It also gets into a problem with auditing because how do you determine the fair value? I can ask somebody I can ask 3 people to give me what is the fair value of this asset, and I would get 3 different answers. Okay. So, David, those are some of the concepts behind the difference. So when you ask the question, how do we handle it under US GAAP? The answer is we don't, because we don't allow you to do. It's not allowed. Okay. So that is the concept that I want you understanding with respect to revaluation. Now, the next concept that we need to discuss is impairment. We already did change in estimates on Tuesday. So I want to look at impairment, and that begins on page 600. There are 2 methods for approaching impairment. And which method we use depends upon what type of asset we're looking at for impairment loss. On page 600, you see that one type is property, plant, and equipment and finite life intangible assets. And those 2 groups of assets have one set of rules. If you look on page 604, you see the second group of intangible assets, assets that have its rules. And those are indefinite life intangible assets. So one group is property, plant, and equipment and finite life intangible assets. The second group is indefinite life intangible assets. Why would they divide these long-term assets into 2 different types of impairment rules?
Because PPE is definitely.
Oh, sorry, feedback somewhere. What is it? Someone was saying something.
Because PPE is finite as well, like it has a set number to it versus like a patent or like something like that. Or maybe not a patent.
Have a set number, and that we have what the capitalized cost is, right? What do we do to property, plant, and equipment and finite life tangible assets every year?
Appreciate.
Good. We depreciate the PP&E and we amortize the finite life intangible assets. So what's happening to the book value of these assets every year?
Decreasing.
They're decreasing, right? Because we're depreciating or amortizing it. Now, the other group is indefinite life intangible assets. What don't we do to this group of assets every year?
Depreciate.
Right, we don't amortize it. Do we amortize intangible assets that have an indefinite life?
No.
Nope.
The book value is staying the same. And that is the reason that there are 2 sets of impairment rules. That is the reason that those assets are divided into those two groups. One group, the book value is going down every year. The other group, it is not, because we're not amortizing it. The book value is staying the same at what capitalized cost is. So let's take a look at the first group, the group that we are depreciating and amortizing. The book value is going down every year. If you look on page 601, you see that there are, under US GAAP, there are two sets, it's a two-step process. Under US GAAP, determining if we have an impairment loss and then measuring that impairment loss is a two-step process. Under US GAAP, we first do a recoverability test. What is the recoverability test?
Testing to see if the undiscounted sum of estimated future cash flows is less than the book value.
Perfect. Does my undiscounted future cash flows, is it lower than my book value? Is it lower than my book value? If my undiscounted cash flows is higher than my book value, then I stop. I don't move to step 2. There's no indication of an impairment loss. However, if my undiscounted future cash flows is lower than my book value, then I move to step 2. And step 2 says, compare the fair value, which is your discounted future cash flows, to your book value. And if your discounted future cash flows is lower than your book value, then you have an impairment loss, and your impairment loss is the difference between the two. Okay. Now let's look at page 602, the top of page 602. At the top of page 602, it gives you the example of, step 1, the undiscounted cash flows was 150 million, and the book value was 170. So because the undiscounted cash flows was lower than the book value, we moved to step 2. And in step 2, you see that the fair value was 135 million, and the book value was 170 million. So we had an impairment loss of 35 million. Look at the journal entry. Of course, we're going to debit impairment loss the 35 million. Then they debited accumulated depreciation for 130 million. When you have an impairment loss, you need to get your accumulated depreciation to 0. You need to get your accumulated depreciation to 0. So they debited the impairment loss for the 35 million. They debited accumulated depreciation for the 130 million. Look up at the top. What was the original cost of my asset? What was the capitalized cost of my asset?
300 million?
300 million. What was the accumulated depreciation?
130.
130.
130 million. So that's how they got the book value of 170. So they debited accumulated depreciation for that 130 million to get accumulated depreciation to 0. And then they credited the asset for the sum of the two. The impairment loss plus the accumulated depreciation is what they credited the asset for.
Are they kind of like going to start over in terms of recording depreciation?
Yes, exactly. So What I want you to do now is I want you to calculate the book value of this asset after this journal entry. Now we know book value is cost minus accumulated depreciation. After the journal entry was done, what is the cost of my asset now? Well, what was it before I did the journal entry?
300 million,
300 million, right? What did I credit the asset for?
165.
165. So if I had a 300 million debit and a 165 credit, what is the cost of my asset now?
Now it's 135.
Now it's 135. What is the balance in accumulated depreciation?
0.
0. So what is the book value?
135.
135. Does that number ring a bell? Ding, 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 ding. What does 135 million equal?
The fair value.
Good, that fair value. So now I've written down my asset because of impairment. I've written down the asset to 135 million. Cost is 135 million, accumulated depreciation is 0. Now, as David so wisely saw, he followed the problem through the rest of the way. He said, if you're changing costs and accumulated depreciation, that's going to impact depreciation. So we've got to change an estimate. You would just recalculate depreciation, because if my book value is now 135 instead of 170, my depreciation is going to change. So you would recalculate your depreciation like you would a change in estimate. Okay, the 135 million, would be divided by the remaining useful life in order to calculate what my new annual depreciation would be if I'm using straight line. Does that make sense? Everybody followed that logic? Okay.
Yep.
All right. Now look at page 603. And look at the green. How do we do this impairment under IFRS? How do we do the impairment under IFRS? It's different. Under IFRS, there is no recoverability test. There is no recoverability test. IFRS says, compare the book value to your recoverable amount. Compare the book value to your recoverable amount. How is recoverable amount defined? How is the recoverable amount defined?
Says the higher of the asset's value in use and fair value, and then you subtract costs to sell from that.
Good. So good, Matt. So the recoverable amount is the higher of two numbers. And those two numbers are the value of in use of the assets value in use. The assets value in use is one number. The other number is the fair value less cost to sell it. You compare those two numbers, and which one do I pick? The higher one or the lower one?
Higher one.
The higher one. So the higher of those two numbers is your recoverable amount. Compare it to book value. If your recoverable amount is lower than your book value, then you have impairment, and the difference between the two is your impairment loss. Now, the two numbers that I'm comparing is the assets value in use compared to fair value minus cost to sell. Well, what in the world is an assets value in use? How do I calculate that number? What is the assets value in use?
The present value of future cash flows.
It's the present value of future cash flows.
What's the difference between that and the undiscounted sum of estimated future cash flows?
What is the difference between value in use and undiscounted?
Yeah, I don't really understand what they mean by undiscounted.
Okay, undiscounted means that I look at the future cash flows from every year and I add them up. That's undiscounted cash flows. We know from time value of money that when you add across time, so you got it now?
So they don't do the time value of money at all?
Exactly. So the undiscounted cash flows is I just added the cash flows across time and don't use time value of money concepts.
Okay.
Discounted cash flows, or I take those same cash flows, but I discount them. I use time value of money concepts. Big difference between the two.
Okay.
Okay. So we're going to do 2 exercises. I want you looking at exercise 527. Exercise 527 is on page 626. And then after you work 527, we'll go over that. And then I'm going to want you to work exercise 1129. One is US GAAP, the other is IFRS. So first work 1127 on your own. You should be able to apply the concepts that we just talked about.
What page number?
626. How are all the students that aren't showing your faces doing? Melissa, how are you?
Pretty good. I have a little bit of a stuffy nose, so.
Oh, Lord.
But I think it's just like allergies.
Yeah, allergies they've been getting, remember my ear and then I was on antibiotics for, and
Yeah.
man, it is still, and I went to the doctor on Monday so they could look at it, and it's just allergies. That's just making it, ugh.
Wow.
Paula, how are you?
Hi, good. Thank you. How are you?
I'm doing pretty well, thank you. Worrying about my mom. My mom had cancer surgery 2 days ago, and she's in the hospital for 5 days. And of course, because of COVID, they won't let anybody in. But
Right. Oh my God, I hope she's doing better.
yeah, she's doing better. You know, still in a lot of pain, but it's hard for her with nobody being able to go up there. You know.
Yeah.
But anyway, at least she was able to get the surgery. She was supposed to get it a month ago, but they wouldn't let her because of COVID. And she had cancer growing in her, and it's colon cancer. But anyway, so Brett, how are you?
I'm doing good. I'm tired.
Yeah, the end of the semester, I know we keep discussing this, but do you find that you're tireder from doing not much?
I'm just I'm just sick of doing the online classes. Like I don't feel like it's as much, you don't learn as much as like going to the classroom.
Oh, gotcha.
And it's just, you're not like getting out of your own house or anything. So it just feels just more boring, I think.
Okay, right. I think, well, I hope that's the case with this class. I hope you're learning a lot in this class.
Oh, you know, I am, but it's just the fact that you're not leaving your house or your room.
Right. That's the part that's getting me also, Brett.
Yeah. So that's my only issue.
It bleeds with your personal life. It's just all bleeding together. And I know y'all are working on 527, but I'm ready to be back in the classroom in the fall. Dom, how are you?
I'm doing all right.
Good.
Hanging in there.
Hanging in. You've got I think we all do. I know it's running rampant through here. And my daughter won't let me, and I understand I'm not upset with her, but I can't hold Amelia, my granddaughter, unless I've not been anywhere for 2 weeks, which is hard because I've had to go to the grocery store, or I've only been to the grocery store and the drugstore, but so I'm on my 2-week hiatus. I went to the grocery store on Monday, and that was day 1. I'm not going to the grocery store, to the drugs, and my husband can't go either. So that I can see Millie in 2 weeks. I can hold her.
If you can use Instacart for some, you can get people to grocery shop for you if you don't want to go.
Yeah, I've looked at that, but they have been so busy that when I go do it, it shuts down. You know, I've tried Ship and Instacart, but anyway, I got enough stuff in here where we'll be good for 2. We'll be good. But thank you for that, Dom.
Mhm.
And Michael and Jordan, y'all doing okay? And Jake?
Yeah, I'm doing good. I'm home now. I was in Tampa for a little bit, but I couldn't handle like being alone there anymore. Everyone left. So I came home. I live in Massachusetts.
Right. There's one thing about, you know, being quarantined and it getting to us like, you know, Brett and Dom and the rest of us, but doing it by yourself, whoo.
Yeah.
All right, so I'll be quiet and let y'all work on finish 1127, and just let me know when you're finished so we can talk about it.
So like impairment loss, like I'm a little, not a little lost, but like, is it just book value minus fair value?
Well, right, you have to see about the recoverability. Remember, it's the 2-step process because this is property, plant, and equipment. So do step 1, does the recoverability test say to move on or stop? And if it says move on, then yes, calculate the difference. We know in US GAAP, fair value compared to book value. So impairment loss, it's not, as you can see, thankfully, we don't have a big calculation thing like we do with interest capitalization, right? A lot of calculations. So what did you get for the impairment loss under requirement 1? Oh, what was the impairment loss?
3 million.
Good, 3 million. 3 million. Because the recoverability test said that we had to move on, right? Because the undiscounted cash flows of 4 million was less than the 6.5. So the recoverability test says move on. And then the fair value was 3.5 million. My book value was 6.5. So my impairment loss is 3 million. Where's Alec? Is Alec in class today? No, Alec is usually here. He had a question for me. In your chapter 11 Connect, you have a problem on impairment doing US GAAP and doing IFRS. And I've gotten several emails from students saying, I know my number is right, but Connect is marking it wrong. Well, read the instructions. If it's a negative number, it says put a minus sign in front of it. And so put a minus sign in front and then Connect will accept it. So we've got 3 million. Now requirement number 2. What is the impairment loss under requirement number 2?
There is none.
There is none. Josh, why?
Because the undiscounted sum of future cash flows is greater than the book value.
Good. That recoverability test says do not move on. So we have no impairment loss. Okay. Now, one of the things that I want to say is, like in Connect, you know, students are emailing me saying, I know my number's right, but Connect keeps marking it wrong. And I say, well, just put a minus sign in front and it'll be right. In the exam, just like I did for exam 2, I'm going to do for exam 3. I'm going to look at every question for every student. And say, for example, on exercise 1127, you put 3, which is the correct answer, but it marked it wrong because you didn't put the minus in front of it. Well, then I will give you those points back. I mean, that's just you know, connect sensitivity of, you know, which it has to have. But so on the exam, all questions that you get wrong, I am going back and looking at it so that, again, you put 3, but it marked it wrong because you didn't put the -3, then I give you those points back. So I will again be looking at every question for every student. Pinky promise. Okay. All right, now look at exercise 1129. This one is under IFRS. All right, so let's take a look at exercise 1129. What is the impairment loss under requirement number 1? What did you calculate as the impairment loss?
70 million.
Very good, Melissa, 70 million. They gave you undiscounted cash flows. Is that even relevant information in this question? Is the undiscounted cash flows relevant in this question?
Yeah.
It is? What did you use it for, Matt?
What, for undiscounted sum of estimated cash flows? Is that what you said?
Yeah.
You got to subtract that, I thought, from the present value.
For what?
Oh, wait, no, you have to subtract the, oh, wait, yeah, for the impairment loss, right?
Okay, so what do I do with undiscounted?
Now I'm
cash
confused.
flows under IFRS?
I thought you'd do that minus the present value of future cash flows.
And what would that give me?
Impairment loss, I guess.
Well, no, the impairment loss, remember, you always have
Oh,
to.
wait, no, it's book value, right? Minus
Right.
present value.
Right, you have to.
Oh, I mixed it up. Yeah.
All right, so your undiscounted cash flows, is that even a relevant number when we're looking at impairment under IFRS?
No.
No, it's
Yeah, my
only
bad.
used for the recoverability test. Do we have a recoverability test in IFRS?
No.
No. So that's useless information. So then we compare to book value the recoverable amount, which is the higher of my value in use number and my assets value in use number compared to the fair value less selling cost. What is the assets value in use? What's the assets value in use? Well, how do we define the value in use? The assets value in use is equal to what number?
150.
Good, the 150, because remember, the assets value in use is defined as the present value of future cash flows. We just read that in the green. And we compare it to the fair value minus cost to sell. And the higher of those two numbers is your recoverable amount. So the 150 is what I'm going to compare to the book value. And so the 210 minus the 150 is your $70 million. It's a negative number, is your impairment loss. That was the process that we went through. Now, for requirement number 2, requirement number 2 says that assume that they use US GAAP. What would be my impairment loss?
$75.
Good, Matt, 75. Now, I first compared my book value to my undiscounted cash flows. There is a recoverability test in US GAAP. So because my undiscounted cash flows is less than the book value, that recoverability test, then I need to go to step 2. And in step 2, I compare fair value to the book value, the 145 to the 220, and got the 75 million. So make sure that you don't confuse those terms. Okay.
So I have a question.
Sure.
What cost to sell? Like, I'm confused on that. Like, where do we see like cost to sell? Because like I saw that in Connect, and I don't really understand.
Well, cost to sell is if I have to pay commissions to a real estate agent, or
Okay.
I'm selling equipment, and so I've got cost of advertising, that it's for sale.
Okay.
So that's all, just whatever cost I have to incur to sell that asset. All right, so that is impairment. The next topic are subsequent expenditures. Subsequent expenditures. Yeah, you can look at the top of page 608 in the green, and they give you, that's just like exercise 1129. It brings you through another problem where you see what the impairment loss was in US GAAP and in IFRS, and you see that there's a difference. So if you want to go through that problem as additional work. All right, subsequent, let's look at page 611. And 611 says subsequent expenditures. All of my, obviously equipment needs work on it. Your car, your equipment that companies have. You have to change oil. You got to change belts on equipment. How do I know whether I need to capitalize the cost or whether I need to expense the cost? Subsequent expenditures. Go back to the root of what is the definition of an asset. An asset is something that is going to give me future value. I've got, future value. There's future benefit in that asset. So if I'm going to capitalize the cost, that means that I'm getting some type of future benefit from it. And you can see on page 611, 1, 2, and 3, ways that future benefit can be added. Does it extend the life of the asset? And does it improve operating efficiency or the quality of the product? I've got a truck. UPS has a lot of brown trucks that are driving around. And I know that tires and fan belts and oil filters and all those things are just general maintenance. It's not going to extend the life of the asset. It would reduce the life of the asset if I didn't take care of it, but that's just regular maintenance. We would debit repairs and maintenance expense. Now, what if this truck is 5 years old? We expected that it would last 5 years, but if I put a new engine in this truck, I could get an additional 3 years of life out of it. And so you do capital budgeting and you see that it's more cost efficient to put a new engine into the truck. Would I capitalize that or expense it? It extended the life of the asset. I can get, instead of getting 5 years use out of the truck, I'm going to get 8 years use if I put this engine in.
Extended?
Pardon me, Matt?
Did you say capitalized or extended?
Capitalize or expense it.
Capitalized.
Was my Southern language, my Southern getting in the way?
I thought you said extended. I'm like, I mean, if it's now 10 years, yeah.
Oh, right. I may have said extended. Who knows?
Yeah, you're good. You're good.
Okay, so either capitalize it or expense it.
Capitalized.
Capitalize, because it extends the life of the asset. All right. So that is how you tell whether you need to capitalize a cost or expense. Capitalize or expense. Now, on page 613 is one of those accounting rules. I don't know, sometimes I've been in accounting most of my life. You know, my dad, I lost my dad in 2014, but my dad was a CPA, had his own firm. And so I've been exposed to accounting most of my life, you know, because he'd bring his work home, or I loved going to Dad's office and playing with all the machines and, you know, the adding machines that we had way back before y'all were born. But anyway, so I get tickled sometimes about all of these accounting rules that I see, and I wonder, how did somebody even think about this? Who cares? And one of those rules is at the bottom of page 613. Cost of defending an intangible right. So I have a patent, all right? I've got a patent, and I believe that there has been patent infringement, that somebody has infringed on my intellectual property, my patent. And so I sue them and we go to court. So what do I do with the cost of defending the right of my patent? Do I expense it, or do I capitalize it as cost of the patent?
Capitalize it.
Well, Matt, as usual in accounting, it depends. And it depends on whether I win the lawsuit or not. I don't know why, I just think this is just funny, but this really is a rule. If you successfully defend your patent, in other words, you win the lawsuit, then you capitalize the cost. If you lose the case, then you expense the cost. So somebody asked about that question. I don't know. Sometimes the details and all of account, this is one of them that I just personally just find as a just a funny rule that you know, why would somebody think about this? But they did, and it's a rule that if you successfully defend your patent, capitalize the cost, you know, all the and if you did not, then if you lost the case, you did not successfully defend it, you expense it. So I thought we would end chapter 11 and end with some of the detailed, just funny rules that we see in accounting, and that's one of them. So that is chapter 11. Now, I want to before we get into, because we got plenty of time left, before we get into any questions that you have, I want to, y'all's exam is on Tuesday at 11 o'clock. Is that right?
Yeah, 11 a.m.
Okay, so y'all's exam is Tuesday at 11 a.m. On Monday, I'm going to have open office hours just for your class. Nobody else is going to know the link. The other intermediate class is going to have theirs. Y'all are going to have where it is just your class is the only class invited. So what time of the day on Monday is best for most of you is what I want to figure out. How many of you have an exam on Monday? Are there exams on Monday or class?
I have an exam at 6 o'clock on Monday.
Okay, so you have an exam at 6 on Monday.
So if morning would be good.
Okay, so morning is better for you, Danielle. So the way I'm going to divide it is morning, midday, and then afternoon. I'm not going to get into night. And the reason I'm not getting into night is because by 6 o'clock on Monday, you should be finished studying. Then enjoy a healthy dinner, watch a movie, and go to bed, sleep. You should be completely done with your studying. You know how cramming is not good for short-term memory, even for young people like yourselves. So how many, and you can vote more than once, how many would prefer like a 10 to 12? Or how many is 10 to 12 okay? So give me some thumbs up. If I can see your face, give me thumbs up.
That's good with me.
10 to 12, I'm seeing good. All right, how about something like 1 to 3?
I like that time.
Okay, but I had fewer at that time. And how about 3 to 5?
And I'm fine with all the times.
You're fine with all the times. Okay. Now I'm going to drill down. I've got 10 to 12 and 11 to 1. Now, I don't know if that hour difference makes a difference for y'all. So how many would prefer 10 to 12 versus 11 to 1? All right. So I assume how many would prefer 11 to 1? All right.
I'm good with 11 to 1.
Okay, 11 to 1 it is. So on Monday, from 11 to 1, I will have open office hours. I will send out the link to you. You can come for 10 minutes, you can come for 2 hours. You know, you can come in and out, it doesn't matter. That's just open office hours just for this class. In the meantime, if you are working a problem over, tomorrow and over the weekend, and you're just stuck and it's just driving you crazy, send me an email. Can handle it email, then if we can't handle it just via email, then I will do a Zoom very quickly. As David knows, you sent me an email and then within 20 minutes, 15 minutes, we were on Zoom.
Yeah, that was
So,
some
so
things.
if you've got a question, it's just driving you crazy, can't wait until Monday because you want to get it done and studying, just shoot me an email. All right, so that's how, I'll be available to y'all during this time period of studying. In chapter 8, if you look at your topical coverage, because students are like, I haven't finished the exam. I worked on it Monday. I worked on it again last night. I haven't finished it, but what I am targeting right now, and it's not set in stone because I have not finished the exam, but right now what I'm targeting is about 5 multiple choice questions for each chapter, which is 20 multiple choice questions, and either 4 or 5 problems. Now I'm going to go through each chapter and give you candidates that are candidates for problems. In chapter 8, of course, doing LIFO, FIFO, perpetual or weighted average, where you had to calculate ending inventory and cost of goods sold, candidate for a problem. DVL, candidate for a problem. Dollar value LIFO, candidate for a problem. In chapter 9, calculating LCM or LCNRV, candidate for a problem. The retail methods, remember your average retail method, your conventional retail method, your LIFO retail are candidates for a problem. Dollar value LIFO retail, that 4th one, is not going to be a problem. It will be multiple choice. I know that dollar value LIFO retail, the one where you've got a cost to retail percentage and the index, is the most calculation intense. That will be multiple choice, not a problem. Okay. In chapter 10, interest capitalization. What is the probability that you're going to have an interest capitalization problem, calculating what is the amount of interest that needs to be capitalized?
100%.
Pretty darn high. And I think 100% is about right. So expect interest capitalization. Also know how to calculate, goodwill. Also non-interest bearing notes.
Is that 10 or 11?
This is 10. So 10, remember, if you acquire an asset with a non-interest bearing note, that you've got to calculate the present value of the note. And then the interest expense is the carrying value times rate times time. So that's a candidate for a problem. In chapter 11, doing journal entries for disposal of an asset. If I sell it, exchange it, or retire it. Candidate for a problem and impairment. Depreciation also. But disposal of an asset. Remember the 4 steps. You've got the 4 steps in a couple of different places, not in the textbook. This is Bostic's, the 4 steps on, I don't think it's in the textbook, but on calculating, calculating the numbers you need to do the journal entry. How do we calculate a gain or a loss if we sell an asset?
Selling price and fair value?
Selling price to book value.
Really?
Right? Selling price minus the book value.
Value we have on the books.
Right. Everything is going to be measured against the book value. If I exchange it, what do I compare to book value to calculate the gain or loss on an exchange?
The fair value of the asset being received?
The fair value of the asset given up. The fair value of the asset given up compared to the book value of it. Now, if I retire an asset, we will not have a gain. We will have a loss that is equal to the book value of the asset. And then I don't know if I mentioned this, but of course, impairment, you know, we just worked some problems on that, impairment. So those are your candidates for a problem, and what I'm targeting for multiple choice is about 5 multiple choice from each chapter, and then 4 to 5 problems. I am
This
very
is shorter than the last one, right?
I don't remember what the last one was. Do you?
Just thought it was closer to like 30 questions.
Yeah, very long questions too for some of them for me.
Well, this one is, it'll be 20 multiple choice and then 4 to 5 problems, which is putting you in the, well, 25 instead of 30, you know. So I'm very aware of time. Y'all finish the second exam. May not have had time to go back through it, but that's going to be typical of exams as you know, go up in your academic career. But I'm very aware of time, and y'all know that I take the exam and then I have a multiplier. Whatever time it takes me to do it, I multiply by 2.5, because it takes you about 2.5 times more for me to do it. So, and that multiplier has worked for me I've gotten it down after 20 years to being that multiplier. So I'm very aware of time. I know that it's open book, open notes because it's an online exam, but you know that if you're totally relying on your open book, open notes, that you'll run out of time. So when you're studying, you know, study so that by Monday, when you're meeting with me, that you're working, you know, the problems at the end of the chapter or problems that I have uploaded without referring to your book or your notes. And then when you hit an OS moment, when you're taking the exam, you have the luxury of looking at your notes or your book for those OS moments that you have during the exam. And that way you're not going to run out, you know, you won't run out of time by having to rely on your notes and books so much. All right, so now. Yes.
Sorry, real quick. Just a question. I mean, I know it's subjective, but do you think doing it on Excel is better in terms of like a time management thing? Because I was super pressed for time on the last test and didn't do it on Excel, and I feel like Excel would make it like easier. At least speed it up.
What I would do is when you're studying, use Excel and then use by hand and see which one works better for you while you're studying. But decide before the exam which one you're going to use.
Yeah, have a game plan. Okay.
Okay, that's what I would do, because I mean, I know for me, I'm faster on Excel. You know,
if you're good at Excel, I'm assuming it's 10 times faster.
Right.
Yeah, I think that's how I'm going to do it then.
You know, so that's just, but you have to decide. It depends on your Excel proficiency.
Okay.
Okay. All right. Any questions about any chapter 8, 9, 10, or 11? Any problems you want to work? Any concepts that you want to discuss?
Could you explain like dollar value LIFO method again? And like the steps to solve one of those problems?
Yeah, DVL or dollar value LIFO retail.
Whatever the one on the quiz was that we had that was doing that Wednesday. I think it was the dollar value LIFO retail method from the quiz.
Okay, DVL is in chapter 9, and dollar value LIFO retail is in chapter 10. So do you remember? Remember, dollar value LIFO retail, have a problem, it's going to be multiple choice, but you still need to understand it. And I recommend for dollar value LIFO retail is working problem 913. Problem 913 is dollar value LIFO retail. And I mean, what you need to do is you've got to calculate what is my cost to retail percent for each layer. And remember, a layer is a year, and each year is going to have its own index, which will be given to you, but it also each year will have its own cost to retail percent. So calculate your cost to retail percent for each year. And then you can determine, did I add a layer or did I decrease a layer? And then that is then where you have to, you know, you've got that at retail, then you've got to convert it to cost by multiplying if I added a layer, the amount that you added the layer by, multiply it by the cost to retail percent of the current year times the current year's price index. So the first thing that you need to do is know that cost to retail percent for each layer. The index for each layer you need to know also, but that will be given to you. So look at problem 913 and just practice that.
Thanks.
You're welcome. Now, for DVL, for regular DVL, the steps are on, I think I even have it. Oh, I do. So let me look at, so on the, yeah, the dollar value for the regular DVL that's in chapter 8, they have the steps, and the steps are on page 431 to 432. Remember, the first thing you need to do is deflate, divide in order to get current year inventory to base year price. Then you look to see if I added a layer or liquidated a layer. And then if you've added a layer, then you need to reinflate it at the index and then add it to, you know, the layers that you had before. If you liquidated a layer, remember that it's going to be a reduction of the last layer added until that gets to 0.
I have a quick question. Oh, sorry.
It
It's about that. So when you finish that part and then you have to do the journal entry to debit COGS and then credit LIFO reserve, what is that amount? How do I find that amount? Is it the one at the bottom that I finished from that whole problem, or is
that amount is, you know, the number that you are given, you're given what ending inventory at end of year prices are. You compare that number to your answer. What did you get that inventory would be reported at DVL? It's the difference. Okay. Your LIFO reserve should be the difference between those two numbers should be the adjusted balance of your LIFO reserve. So then you need to figure out what journal entry you need to do to get it to that adjusted balance.
Okay.
All right. If you look in course content information, I do have a DVL problem uploaded that you can practice along with the solution.
So it's what are the two numbers? It's the final one that I come up with, and then compared to what one?
Compared to ending inventory at end of the year price.
Okay.
All right, which is FIFO. If you think of that's your FIFO.
Yeah. Okay.
Ending inventory at end of the year price is FIFO. Okay. So ending inventory at end of the year, which is your FIFO number, you compare to DVL, which is your LIFO number, and the difference between FIFO and LIFO is your adjusted balance of your LIFO reserve.
Okay, thank you. That makes sense.
So that if I take my inventory number, if I'm reporting under any LIFO method, if I take my inventory number that's reported on the balance sheet and I add my LIFO reserve, then that would give me inventory at FIFO. Does that make sense? Okay. All right. questions? Josh, it's so good just showing your face. I was about to say, can everybody, this is my last, well, I'll see y'all taking an exam, but this is the last day of class, and I get sappy on the last day of class because I care. I care a lot. I care not about just, thank you, Michael. So good seeing y'all. I care. Thanks. Hey, Paula. Oh, Jake who left Tampa. Nelson, who's still in Tampa or Riverview. You live real close to me.
Yeah, I know. We live really close.
Uh-huh.
We live really close to each other.
Probably only 10 minutes apart.
Yeah.
15 if I got to fight Bloomingdale, but anyway, I thoroughly enjoy teaching intermediate. I thoroughly enjoy sharing my passion, which I hope is obvious to y'all, about sharing in intermediate with y'all. I know that I'm hard. I know that I push you. And I don't do it because I enjoy, what is that S&M? One enjoys inflicting pain and one enjoys getting pain. I don't know which one is which because I'm not into that at all. But I push you because I know what is expected of you, not only in your ensuing classes, but also in your career. And I hope that you can self-reflect from day one when you entered intermediate one and were sitting there scared because you are nervous or anxious because you've heard about Dr. Bostic and how tough she is. I hope that you can reflect about where you were, not only accounting knowledge-wise, but even intellectually. I hope that I pushed you some, hopefully a lot, but pushed you some from memorization to actually being able to critically apply what you learned. To look at it that it's not just the straightforward way, but how to utilize the information to make decisions or how to derive other numbers. Because that is what's going to be required of you, not only in college, but in your job, in your career. And I hope that your self-reflection is that, yes, I did grow intellectually. That's important to me that you did. It's the reason that I push you, not just for the accounting knowledge. Accounting majors, yes, for the accounting knowledge, but also for helping you develop that critical thinking. So reflect on that you gained that also. Brett, I know that moving to, and Brett's not the only one, that moving to online is not, in my opinion, the reason I choose to teach face-to-face instead of online is because of the extra learning that you can get from that one-on-one. If you go into intermediate 2, or you go into your other accounting classes, and you feel like that you lost something because of online in intermediate, come to me. Come to my office. I really enjoy seeing students that I've had stop in and not only say how are you doing, how's life going, how are your accounting classes going. I enjoy that a lot. But if you feel like that you missed something, please come to my office and we will sit down and we will learn it or relearn it or do whatever extra we need to do for you to get that information. Please come see me. I'm not here just for you now. I am here for you until you, well, really for as long as you want me to be. I've had former students email me and say, Dr. Bostic, I'm having a problem. Can you help me with this? This is at work. Sure, did you think about this? I want to be an asset to you now and going forward. That's important to me. I got out of public accounting. I loved public accounting. I loved auditing. I loved fraud investigation. I got into teaching, a career change for me because of my passion for sharing, not only accounting, but also I chose to teach intermediate because I know how critical this course is, and hopefully we gained that. I have traditionally for 20 years, when students hand in their final exam, I shake hands of every student, letting them know that how much I enjoyed having them in class. I'm not going to have that opportunity this semester because it's online. And I'm also curious to see that if shaking hands is no longer part of our business culture, given COVID-19, how much has it changed what we're going to do in life? But I am going to miss, maybe we would have done elbow tap this year instead, but I am going to miss that. And that was something that was important to me. So know that I do extend my very heartfelt wish to you of being a very successful going forward in your academic career and in your accounting career. I want that for you. Okay. Again, reach out to me between now and Tuesday. I'll be here. If we can't handle a question email, we'll set up a Zoom, or if it's something that can wait until our office hours on Monday, we'll do that. But I want you to be successful. Okay. Anything that I can help y'all with for now so that you can have effective, efficient studying going forward.
Really quick, this may be a little silly, but are you still doing the bonus for your family, like knowledge?
Oh, yeah, I wrote that down.
Oh yeah, I'm going to write, there will be I will write in a question.
Okay, I was just...
Absolutely. I am writing in a question. There will, because I can't create my own. So I am writing in a question, you know.
So how does that work if you can't add one to the Connect test? Do we have to like email you?
No, I'm 100% positive I can add it to the Connect test.
Oh, okay. Okay. So you'll add that one. Okay.
Absolutely, I'm adding it.
All right. I wrote that down. I remember like in February, like the facts you said. So.
Oh yeah, there's some things.
I want that extra credit.
What is the problem for chapter 10 that I uploaded? Let's see. Oh, the interest capitalization problem. I forgot the name of the interest capitalization problems that I uploaded. Was one of them Serenity?
I think so.
Yeah, I think it's titled interest capitalization. Okay, you only see union.
I only see union.
Okay, thank you, Maya, for letting me know that, because there is another one, and I'm pretty sure it's called Serenity, and I will upload it as soon as this class ends. It will be uploaded as soon as I end this class. Okay, I think it's called Serenity, but it will be titled, interest capitalization, just like the union is. So I will upload that immediately. Interest capitalization, I'm writing a note, but I'm gonna be doing it right now before I leave this chair. Okay, so thank you, Maya, for letting me know that it wasn't uploaded, but it will be. Any other questions or comments or? Now,
Just curious, do you teach anything else that we would have? Because my other two accounting classes I've had, I have one that in grad school and the other one's going to do the auditing class. So like, what else do you teach?
I used to teach auditing. I used to teach auditing and intermediate, but I teach intermediate, and I teach one class, but I'm the intermediate professor. I used to teach intermediate and audit. So you would see me at the beginning of your major class and then at the end of the
end, yeah.
class. but they needed more sections of intermediate, so not teaching audit anymore. I may start teaching audit again. I've thought about doing that because I was an auditor for many, many years.
This is kind of like maybe more of a personal question, but like, how do you feel about like those 4-hour accounting classes?
Oh, I wouldn't do them at all.
You wouldn't do them?
Oh, hell no.
Okay.
Nope. Auditing is easier to do in a 4-hour class than other, like intermediate. This class, 4 hours, or intermediate 2, 4 hours. No way in hell. No way. Auditing is not as much number crunching. It's a lot of theory. But, you know, and I think auditing is only offered at night next semester. But y'all don't qualify to take auditing yet anyway. But no, we have to offer them.
I registered for it. I'm taking it in fall.
Yeah, I think I'm thinking either auditing or tax.
Auditing is the least painful one because it's so much theory. But taking a heavy quant class like cost, intermediate 1, intermediate 2, tax. Has anybody taken tax yet?
Beginning next semester.
Did you
I'm
take?
doing it next semester, the 4-hour one.
Okay, well,
Good.
who is? Wait. Oh wait.
Yeah, I got you then in my class, bro. It's gonna be.
Wait, stop. Who has taken tax?
Me.
Okay, Nelson. It's the only one that's taken tax. Nelson, did you take it during the day or in 4 hours?
I took it in 4 hours.
Okay, what'd you think about tax in 4 hours?
It's a lot, but like the professor like gives you enough break, so like he gives you a break after every 50 minutes. So
All right,
like,
let me ask you this question. Did you talk with people that had tax during the day?
No.
Okay, so you didn't have a comparison of what their experience.
No, I don't really have friends like that.
During the day or at night. I mean,
I kind of like preferred it, at least for me, because I commute, and my commute is a pretty hefty one. It benefited me to just take it like that because of the way my schedule was set up when I was taking it. So I didn't mind it. Now, for somebody that stays on, I mean, I don't know how it would work for this fall, but like for somebody that was on campus, I don't know. I think it's the same concept. It's just it's divided into 2 sections instead of having it all once.
well,
So I think it's a little easier depending on your course load.
And didn't y'all like learn material one day and then taking an exam like the next class?
Yeah.
All right, and then the day class though had it right. So that's the kind of thing that happens. And tax, is it easy class?
No.
No. One of the things is, and tell your friends, because obviously y'all didn't. Nelson, could you take tax and intermediate 1 the same semester?
Never. You'll probably fail both of them.
Never take intermediate 1 and tax.
Very difficult
classes. Y'all didn't, but if you have friends that are taking tax in the fall, just don't do it. Don't take intermediate. You know, students that I've had in intermediate 1 and tax, oh my God, they are just dying.
Yeah, they're 2 very like study intensive courses. Like you can't just wing it. Like, it's really hard.
Right. So that's that advice. You know. So all right, get studying so that you're not cramming on Monday. By the time we see each other on Monday, you're just clarifying some things so that you can take Monday night off, watch a good movie, do whatever relaxes you, and then, you know, take the exam. Okay, so you've got some time to prepare. I really wish that I could see each of y'all, you know, like in person. So I will be checking email often, and I'm here to help you through this, okay? I will be dropping, you had 8 quizzes. I will be dropping 2 of them. I do plan on y'all's exam is on Tuesday. I want to get your AS2 grade. I would like to have it. My goal is to have everything graded. I've got a lot of grading to do. My principals has their financial statement analysis. But anyway, my goal is to have all the grading done before you take the exam. All right. I am promising you, if you look at the grading scale, a 70 is a CD. If you earn a 70, you will get a C. A 70 is a C. I understand the importance of you have to have a C in order to move forward in this class for accounting majors. I consider a 70% average. An average is a C to me, not a CD. So I will promise you that if you got a 70, it won't be a CD, that it will be a C. Okay, but we're shooting higher.
Thank you.
Shoot higher than that, right? All righty, well, just let me know if you need anything else. I'll be here as much as I can, for you. Okay?
Okay.
I thoroughly enjoyed. Oh, thank you very much.
Thank you.
You're quite
Thank you.
welcome. I've enjoyed
Yeah, thanks, Professor. Good luck to everybody in the class studying.
Oh, yes. And Nelson, were you able to get a study group?
Yeah, we have a nice little group chat going, and
oh, good.
And talking about.
Good.
Yeah,
And
we talk about.
Set up your own Zoom meetings, right?
Yeah, we're able to.
Okay, great. Glad to hear that. All righty. Well, I will see y'all on Monday.
Yep.
And then
See you guys. Good luck, everybody. Later.
Thank you. So good seeing y'all. Bye-bye. I'm gonna get teary-eyed.